So here's a business idea for you. What if you create a business in which people could store the money that they've worked hard for with you to make sure that it's safe, right? And in order for them to store the money with you, all you would do is charge them like a small fee. Sounds pretty good, right? I mean, we all need our money to be safe, right? Now, the key part of this business isn't actually storing the money, right? Like that's just the way to get the money in. The key part of this business is that the money that people give you, you're able to take that money, a portion of it, to then go invest that money to make more money on the money they gave you to store the money to begin with in the first place. Now, if you're thinking, wait a minute, Brighton, that sounds way too good of a business idea. Well, if you have a bank, if you put your money at the bank, that is the business model that you're supporting. That's essentially what a bank does, right? So in this video, I want to show you why you don't need to be paying anyone any fee to be storing your money. So I'm going to go over two options that can allow you to store your money completely free without you having to be charged a fee. Hey everyone, welcome back to another video. If you're new to the channel, my name is Brighton. I'm a licensed mortgage broker and the author of the book Master Your Mortgage: What the Bank Will Not Tell You About Buying the Right Home. On this channel, I essentially tell you what the banks don't want you to know about your money so you can grow your money rather than making them rich. So for today's video, I just want to go over the two options that I use when it comes to like my personal checking account. Because like I said in the intro there's no need today for you to be paying a bank money to store your money while they use that money to make more money for themselves. Like it just doesn't make sense. So I want to go over the two options that I've been using pretty much since, I don't know, I was in university, and kind of detail some of the benefits of those accounts so you can then set yourself up. So the two banks that I deal with when it comes to my personal checking account is Tangerine and Simply Financial. So for this video, I just want to highlight some of the features of their accounts and then also give my personal take in terms of how I've experienced using these accounts to help you understand how they work to determine which one may work best for you. So let's start with Simply Financial here. So this is Simply Financial. If you want to access the actual account, just go to simply.com or just do what I do, which is just Google Simply, and then you get to this section here. But they have essentially all their accounts here are free. So they have a free checking account, which is the one that we're interested in. They also have a high interest savings account. Again, it's free. I'm not going to go over the high interest savings account, but just know you can also activate like a savings account if you want to. The big difference here, just quickly for the savings account on both these products, is they usually don't have a minimum that you have to put down to earn the interest rate. So usually with the big banks, you have to have like, if it's like, I don't know, 2% they're giving you of its interest rate, you may have to put down like $1,000 or maintain that minimum balance throughout the entire year to earn that interest. With these two accounts that I'm going to go over, you don't need to have usually a minimum amount. You can earn whatever interest they're actually given for the account without having to have a set minimum in the account throughout the entire year. But let's start with just the check-in here. So when it comes to the check-in account, the big thing obviously is that it's no fee, right? You don't have to pay a monthly fee, so that's huge. The other thing you get with the Simply check-in account is you also have unlimited daily debit purchases, bill payment, and withdrawal. Essentially, if you're dealing with like a traditional bank, usually they'll have like a minimum debit transactions that you can do per month. It might be like you get like 25 transactions, or it might be you get 13 transactions per month. And if you go over that, then you're gonna have to start paying a fee. So with this account, with the Simply account, you don't have to worry about that. You can use your debit card as much as you want anytime you want. There's no additional fee for using that account. The other benefit with the account is that you can do e-transfers completely free and you can do as much as you want. So with the big bank, you have to keep in mind, like sometimes you might have like free e-transfers, which to me, by the way, this is just crazy. Like why are they even charging a fee for you to just transfer money between them? Like it's crazy to me. But anyhow, with the big banks, you have to be mindful that if you do an e-transfer, depending what kind of package you're on, that might be free or it might not be free. But with a Simply account, it's always free. So when you send money via e-transfer, you don't have to worry about that because it's always going to be free. The other benefit they have here, and the key reasons why I have this account here, is they're actually tied to CIBC. Now, if you're not familiar with CIBC, CIBC is one of the largest bank in Canada. So these guys here, and essentially they created Simply. Now, to go back a little bit, Simply actually used to be like the front end for Real Canadian Superstore. So if you're Canadian, you know what I mean. But they used to be the one that actually used to be servicing this account. And then some years back, they transferred it to CIBC directly. Now, CIBC has always been involved in this program from the very beginning. It's just they were behind the scenes. So some years back, Superstore essentially decided they want to sell their interest in this account. and then they sold it to CIBC. So then CIBC owed the entire thing completely. So then they set up, they rebranded the entire thing to Simply Financials. Now, if you're an OG like myself, you start off with originally with Superstore or PC Financial, they used to call it, and now you're just, Simply Financial. Now, I bring that up because the key thing to note is that this free access to a 3,400 CIBC ATM account is really important for this account. Essentially, this is how you pull money out if you need to get money like cash on hand from an ATM machine. So what you would do is you essentially go to any CIBC, branch that you have out there, which is pretty much anywhere that you live in most parts of Canada, and you can pull money from those ATM machines completely free. So this is the huge benefit with being part of Simply Financial is you access CIBC bank machines ATM without any additional cost to you, right? So if you need to, like I said, if you need to pull out cash, then you can just go into a local CIBC account and there's no actual, not account, but CIBC ATM machine. And then you can pull the money out and there's no extra fees for that. So that's huge when it comes to this account. The other thing I want to point out when it comes to this account is that you can also add like overdraft protection to this account. So again, that's just to protect you if for some reason you forgot that your bill was coming out. You can apply for overdraft. It's not guaranteed you're going to get it, but you can apply for it. And if you do get it, that can be added to this account as well. And then you can do the normal stuff you always want to do, right? So if you want to set up like direct deposits or if you want to have your paycheck coming out, you can do all that with this account. So that's not a problem at all. So overall, my experience with Simply Financial is that it's been pretty good. Early on, there were some glitches like way back in the day. Like for example, early on with this account, you couldn't even name your specific account and you couldn't transfer money directly between like your savings and your checking account. You actually have to wait a couple of days to do that. So they've updated some stuff, made some investment on the technology side, so you can do all that. You can actually nickname your accounts now, and you can transfer money quickly between savings and your checking account. So my overall experience with Simply is that it's been pretty good. Again, I think most of us that are using bank accounts, for the most part, all we're using it is to store our money, right? To get like our paycheck, go into that account, somewhere where we can store the money. We don't actually go into the bank on a day-to-day basis. At least I don't. And I think the vast majority of people, if you think about how often you actually go into the bank, you realize that you don't go into the bank that often, right? What you need to go into the bank for is usually things like if you need to get like a draft, right? That can be a problem with these accounts because I find that you can get a draft. You just have to be mindful that they have to mail out the draft. So if you need to get a draft like right now, that experience where you can walk into your bank and then talk to a teller and then say, hey, I need $10,000 in the bank draft. And they'll write that bank draft right away and you get that copy of it. You can do the same thing with Simply. It's just it's over the phone and then they have to mail it out. And I think the earliest, and I could be wrong on this, the earliest is like maybe it'll take like 2 businesses if you do like express for them to get that check to you. So if you need to get that like right now, that's not going to be possible with this account. But other than that, I found Simply to be actually like a really good account. I enjoy using it. It's worked for what I need. Like I said, I'm not someone who goes into a bank or needs to go into a bank. Most of the stuff that I do on a day-to-day basis is either transferring money from one account to another account. Oh, that's the other thing with this account. So you can actually set up this account with another account. So in my case, I have Tangerine as well. So what I do is I connect those two accounts. So if I need to transfer money, say from one account to the other, and maybe it's a large amount where I can do it via e-transfer, I can actually set up both accounts so I can direct debit the account and then it'll come into the Tangerine account. Now it takes a couple of days, like it may take 1 or 2 businesses for that money to arrive, but it just saves me the hassle of having to, like call them, send a check out. I can just set that account up. So that's another thing with this account. So like I said, I don't really have any major drawbacks when it comes to Simply account. Some of the stuff I had issues with early on, they've kind of resolved. The only one minor thing that I do kind of find weird is that they still have this inability for you, like let's say you set up their credit card, because they do have the ability for you to get a credit card here. Let me just go back and show you their credit card. So let's see here. Yeah. So they have their cashback credit card. Now, with Tangerine, if you have a credit card and I want to make a bill payment, I can just go into my checking account and transfer that money directly to my credit card, right? Because it's all attached together. With Simply, you can do that for some reason. You actually have to set up your Simply Visa as like a bill payment rather than you being able to just transfer it. So it's kind of annoying because you can see the credit card on your online profile, but when it comes to like transferring money directly into it, you can't. You have to like do like a bill payment. So it's not a really big deal because the payment seems to get there pretty instantaneously. However, it's annoying that you can see it, and most banks now they allow you to just transfer the money directly into your Visa account. So not a big deal, but just something to be mindful of. And I think it's something they should fix rather than keeping it going. Okay, so let's review in terms of how much savings are you gonna be getting when it comes to like going with like a Simply account as opposed to opening like a CIBC account. So I'm on their website here. So let's go to the bank account. And what we'll do is just look for their checking account and we'll look for the cheapest option we can find when it comes to their account features. So if we go here, it looks like the cheapest one I have is a CIBC Smart account. And essentially it looks like it's I don't know, $0 to up to 16.95. So let's just go over their quick note in terms of what they're saying here. So let's look at the account. So it says pay no monthly fee. So let's just go because by the way, it just a quick tip. If you're ever trying to find out like, what it means by like these options, no fee, just look for this number here. So you can see they have a number 2. And then what you want to do is look for anything on the legal down here. Usually it's in the bottom because they know you ain't gonna look at the bottom. So go to their terms and conditions, and then what we want to look for is number 2. So it says entire monthly fee is rebated if you maintain a minimum daily end of balance of $4,000 each. So there you go. So it's not really a free account. Essentially, for you to get this account free, what they're saying is that you have to maintain a monthly ending balance of $4,000. Now, I don't know about you, but I ain't keeping $4,000 in the account. By the way, why do they want you to have $4,000 in the account? Well, let me tell you, because banks, like I said earlier in the promo, banks have the ability to take a portion of that amount that you put in their deposit to then invest it or lend it out. So by having the minimum balance being really high, it means they can take, let's say, the minimum they can take out of that account is 50%. Well, now they can take $2,000 of that money and then go do whatever else with it, lend it out, invest it, right? Because the whole idea with banking is that most people are not gonna wanting to pull their money out, right? They're not going to want to do that. At least you hope not. But it could happen when there's an economic downturn. People may rush to the bank, what we call like a bank run, and want their money out. And that's why most banks don't actually have all the money that they claim they have on your online profile because some of that money is being invested, right? Okay, so we're gonna go with the 1695 because most of us are probably not gonna have $4,000 sitting in that account on a day-to-day, on a month-to-month basis. So let's go 1695. Let's see what you get with 1695. So essentially, I was trying to figure out what you get with this account because there was really nothing being shown up front. Essentially, what you get is nothing really. You're just getting 12 transactions here. And if you go on here, it's $6.95 per month for up to 12 transactions, and then $1.25 for every transactions over the 12 there, and then for 16.95. So like you said, there's no real benefit here. So essentially they're just charging you a fee to store your money. And by the way, if you keep $4,000 in the account so we can then make more money off that, then we won't charge you any fee. So again, you can compare that with 16.95. So we'll go 16.95 and let's just look at how much savings you're getting here. So I'm just gonna pull up my calculator here. Okay, so if we go 1695 we have here, and then let's do over like 12 months, right? So essentially you're giving the bank $203 per month to essentially store your money for them to make more money off it. Now, that probably doesn't seem like a lot of money, but if we multiply that by over 25 years, what do we get? So $5,000. Now, for most of you, that's probably still $5,000 over, 25 years. The bank will say, well, you have the ability to, talk to an advisor, which is not really an advisor, it's a salesperson. Um, that's just what it is. Like, it is what it is. Like it's a sales role because I was doing that role. It's a sales role, right? And then the other thing they would say is like, hey, you have access to this network. But with the Simply Financial, you have access to the majority of those things. The only difference you don't have is like if you want to go meet someone directly, you don't have that option. So I can understand that, but for the most part, most of us don't go into the bank actually to deal with an advisor. Most of us just go into the bank to pull money out or pay bills and do things that we need instantly. We're not going there to actually build a relationship with someone that can work with us over the long term, right? So, like I said, most of us are just paying to store our money. Now, this $5,000 seems like nothing, but if we go over here, and again, keep in mind, what are we looking at? It was 16.95, and it's really important that you understand really how much money you're losing because it's not that $203 we mentioned a month, right? So let's just go do this. Let's go 16.95, right? and we're doing a monthly basis. Let's put the rate at 4% and let's say 25-year and compound annually here. So let's see how much we're actually, again, it rounded it up to $17. So let's just go 16 because it was 95, but we'll go 16. So if we put, again, what I'm doing here is showing you how much money compound wise you're losing because this is essentially what the bank is making with your money on the back end, right? So if we go $16 per month that we're going to put away, because rather than us actually opening a CIBC account, we can open a Simply Financial account and then put that $16 away into an investment. Because right now, if you have like CIBC account, you currently have the ability to put away $16 per month. So why would you not keep doing that if you open a Simply no fee account? Okay, and then we're gonna say 4%. That's a really low rate. You could probably get a higher rate, but let's say 4% to be safe. And then we're gonna say you're gonna invest that over 25 years. So what do you end up with at the end of 25 years? I'm just gonna double check. Sorry guys, just want to double check I entered all that detail correctly here. So again, $16, and we're gonna do this to monthly because that's what we're doing. Okay, and then we're gonna do the compounding yearly, and then move this to 25 years. Okay, so at the end of 25 years, that, $16 per month that you're paying amounts to over just shy over $7,000. So 7,095.92. Now, the critical thing with that is to note that 2,000 of that was earned on interest. So remember earlier how I said the bank wants you to put that $4,000. The reason they want that is this is what they do on the back end. They're going to invest a portion of that and earn interest on the money that you worked hard for and you give it to them to store. So you need to be mindful that if you're still dealing with a bank in which you're paying them to essentially just store your money, you don't need to do that. You could be making money off that money yourself, right? Rather than you giving them the money. And just because maybe they've done a really good branding, and like I said, most of us will just keep doing the same thing over and over because we're kind of creatures of habits, right? So if our parents, open our CIBC account, we may just deal with the CIBC account because, well, we've been doing that. Or if the CIBC, branch isn't by us, we're just going to keep doing that because we're just accustomed to doing that, right? It's hard for us to break bad habits, right? So you need to understand that this is how much money you're losing. And it doesn't seem like very much, but if you take that what is it, $7,000 there, right? And if we put it up here and we're talking 7,095, and you just take a million customers, right? So that's a million. Like, that's how the bank makes a ton of money, right? Because it doesn't seem like very much individually, but if you have a million people paying that fee, right? That fee adds up to be very, very, very a lot of money, right? That's why the bank makes the money. So we're not the bank, but you can certainly replicate the bank's habit here by understanding that you don't need to be paying a fee for someone to be storing your money. Rather than that, what you could do is do what they've done to you, which is you could discipline yourself to say, you know what, if I open a no fee Simply account, and if I were to just to put that $16 away every month, right, in a well-balanced investment portfolio and just don't even look at it and just let it sit there, I would compound my investment, right? And I would end up with about $7,000. And if you realize that's what you could end up with, then what you could do then is then actually up the amount that you're investing in. But let's move over to Tangerine now and kind of go over their account product. Okay, so when it comes to Tangerine, it's similar to the Simply account. They have pretty much the exact same feature. The only key thing I want to point out when it comes to the Tangerine account here is, again, it's no fee, so you don't have to pay any fee here. You do get free e-transfers as well, and you can pull out money from any Scotiabank ATM because, again, the Simply account is tied to Scotiabank. So essentially, if you need to pull out money, unlike the Simply account, which it was tied to CIBC, you would go to a Scotiabank ATM. Now, the one different thing that I like about the Tangerine account is this ability. They have what they call like the Scotiabank's Global ATM Alliance. Now, what is that? Essentially, when you're traveling around the world, if you're looking to pull money out of an account, usually you would have to pay like, a foreign charge fee to pull the money out, like from the actual ATM. But if you pull money out at one of these banks that Scotiabank has partnered with, you don't have to pay any ATM fee for pulling the money out. The only thing you would have is you would have to pay the foreign conversion fee. So when I went to Paris, I dealt most of the time, and again, this was where's France here? Give me a sec. Okay, so France. So what I would do is I would go to look for this ATM machine and I would pull out money from this ATM machine and I wouldn't have to pay any ATM fee. The only thing would just be the foreign conversion fee that I would have to pay for. But that's not a fee, that's just them converting the money to a Europe or whatever dollars that you need. So that's one key benefit that I really like for the Tangerine account as opposed to Simply account is having access to this global partnership that they have with Scotiabank. But other than that, both accounts are the same. Both accounts allow you to name your account. You can transfer the account. Unlike the Simply account, all my accounts on the Tangerine side are tied together. So if I have a credit card and I want to pay the bill on the credit card, I can just transfer the money onto the credit card and it's instant. Like it drops into the account. I don't have to add it as a bill payment as opposed to the Simply account. So both accounts are really great if you're looking for, the ability for you to just be able to like have an account to put your money in, to get your payroll in, to pull money out, to e-transfer and not have to pay a fee. Both of them work. I don't think there's really one that's better than the other. It's just keep in mind they have certain features. So while Tangerine has this global ATM alliance program, Tangerine simply, sorry, not Tangerine, simply has what they call their international transfer money. And I really like this because I recently had to make some money for some purchases overseas and I used this feature and it was fantastic. I was able to transfer the money quickly. There was no fee to transfer the money and all I needed was that person's account detail and the money went right away. So it was really great because to transfer money internationally, I like Simply for that. Now you can do this with the Tangerine side, but I think it's done through Western Union, and again, there's a fee attached to it. So if you're looking to transfer money overseas, the Simply one is definitely a good account to look into. Okay, so let's take a look in terms of how much savings you're getting by opening up a Tangerine account as opposed to a Scotiabank account. So here they have their basic package here, which is it looks like you get 25 transactions, debit transactions per month, and they include free e-transfer. So that's good, I guess. The cost is 11.95. So again, at 11.95, let's pull up the calculator here. 11.95, and then we do it over 12 months. So you're looking about 143, and then if you do that over 25 years, then just over under $4,000. But again, what we want to look at is how much is the bank actually like making on us here. So we'll just go $11, keep everything the same, 25 years. So you're looking at just $4,000 if we take the 4,878 and then we see how much money the bank's actually making. Say they have 1 million customers paying that amount. Yeah, that's a lot of money they're making off fees. So this is why banks really love fees because it's just an easy revenue. By the way, it's not just the bank; it's really anyone that's running a business, right? Again, if you think about Amazon, it's the same thing. Those Prime memberships, right? You pay that right away; they have money before they even sell a single product. Costco, the same thing, right? They made money before you even step into the store. In this particular case, I think what makes banking really challenging for the fee is that you're not necessarily getting any value for that fee, right? At least with the Amazon membership, right? You have other added benefits they try to justify with that fee. Same with the Costco, right? With the bank, all they're essentially doing is just charging you a fee to hold the money so they can then use that money and make more money off it. So I think their fee really doesn't seem like they're adding value to it. Now, the bank will say we do add value, right? We have all these extensive networks, we have, financial advisors, we have, tellers, all these different things. Yeah, but in today's world, all those things really are not additional added value, right? Because pretty much most of us can do that nowadays, right? Most of us are not going into the bank, right? Most of the stuff the bank does is all online based, right? Transferring wire money back and forth. So really, how much cost are they really incurring? Not a lot, but yet they're still keeping their bank fees pretty high because they want to protect that top line revenue number. So just keep that in mind that you really don't need to have an account in which someone is charging your fee. Okay, so which of these accounts do I personally prefer to use? I don't prefer any one of these accounts. I've been longest with Simply Financial, so that's been the account I've had the longest. But I did open up a Tangerine account because early on in the process, like I mentioned, Simply had some issues, in this case PC Financial when I start off. They had some issue with just being able to transfer money and name accounts. I like to name my accounts, so I set up a Tangerine account because of that. But having both of these accounts, Honestly, I think you should have both of them because both of them are free. So, for example, when I'm traveling, I'd like to have my Tangerine account with me because if I'm happen to be in Europe and I see an ATM and want to pull money out, then I know, I can target specific ATMs to pull money out. Now, there's other ways to do this where you don't need to have like a Tangerine Simply account, but I'm just saying if you happen to have a Tangerine account and you don't want to set up a different account, then you can have that as well. But the key thing I think to take away from this whole video is that you don't need to be paying someone a fee to store your money, and there's options out there. And if you've just been going to the bank, the big bank, because you're just accustomed to it, you need to understand that there is a cost to that, right? Remember that figure we talked about in terms of how much money you're losing out over a 25-year period that you could be to invest in that money. So you need to really be mindful of that. And I think one of these options will work well for you. Sure, if you're not used to doing the whole online thing, it might be a little bit intimidating at first for you, but most of us nowadays are living online, right? We're transferring money online. We're not really going to the bank to do anything major other than when we need assistance. And if you really need that, you can just call someone over the phone and they can help you out with that, right? So don't be afraid with going online if you're not accustomed to it. Just know that you don't need to be paying someone $16 or $12 per month to store your money. So I hope this video was helpful for you guys. I'll leave the link in the description here to how to access these accounts. I don't know. I think there's some promotion things that I may be able to attach to it. If there is, I'll attach to it to help you guys get started. But again, look at these options for the account. And either one of these, in my opinion, will work well for you. Just don't go with the big bang. All right, everyone. So that's going to wrap it up here for this video. I hope you guys found this one helpful. Again, don't forget to check out the website. If you're looking to learn more about money, make sure you check out my courses. So if you're looking to learn how to actually buy a home, do it the way that you should do it, not the way the bank wants you to do it, check out that course as well. And if you're a renter and you're looking to figure out how do I actually create wealth while I'm renting, because in today's world, it's really difficult to afford buying a home, but don't fear about that because you can still create wealth where you can retire comfortably if you're renting. So check out that course, Wealthy Renter. And my personal favorite, if you're looking to learn just how to think like a wealthy individual, how to create wealth like them, check out my free course, How to Create Wealth Like the Forbes 100. But again, if you guys have any other questions for me, check out the website, send your details, or check out on my social media to send me your questions. But until next time, guys, catch you guys in the next video. Take care.